Thank you for joining the ACA Small Business Bootcamp and Resource Collective for this Thursday, May 27th. We're excited to have everybody with us today. We've got a great session planned. I'm Robert Theobald, the Small Business Ombudsman and Vice President of Small Business Services. And as always, we like to start with recognizing and thanking all of our community partners. We could not do these bootcamp sessions without all of our partners, their help, their time, and their expertise. Excuse me. The Small Business Bootcamp and Resource Collective is designed to help small businesses. It originally started by working through the COVID crisis, and now we're focused on returning stronger than ever and providing support and guidance to businesses to do that. It is a statewide initiative supported by all of our community partners. And besides the bootcamp, it is a resource collective and a content library. So the Small Business Bootcamp website has a number of great things. First, it's where you went. It's the website you went to register for today's session. We also list all the upcoming sessions that we have planned out and available to register for, so you can register for this week's and next week's sessions. We also have the bootcamp, or the resource collective is listed on there. And then at the bottom of the page, we have our archive section. And in the archive is our content library. And we record all of our bootcamp sessions and post the recording and the materials that our expert provides, including the slide deck, on that archive. And so you can go back and watch any of the sessions you may have missed or ones you may have watched and want to review. They're available in there, creating a massive content library of expert guidance from business professionals, business experts, counselors, and others that have provided their time and expertise as part of the boot camp over the last 54 weeks. So with that, I mentioned the Resource Collective. On the Resource Collective page, you can find tools and guides that have been provided by our community partners to help support small businesses. These are just a sample list of some of the guides and resources that are available to you on the Resource Collective. As you can see, we touch on retail, manufacturing, construction, cosmetologists, etc. So it's a lot of great information on the Resource Collective. Additionally, the ACA has the COVID-19 Arizona Small Business Resources website. And on this website, you can find additional business guidance, and you can find financial resources. And on the financial resources, we list all the grants and loan programs at the state, local, state, and federal levels that are available. And we update those as often as we have information on them. Additionally, the ACA has a number of programs that can help support small businesses. Our Small Business Resources division can help work with the SBA, work with the Small Business Development Centers, SCORE, and other no-cost business counseling programs. We can also help you work with local banking contacts if you're looking for funding, and share guidance on the latest developments in the small business world. Additionally, our Workforce division can help provide support if you're looking to hire employees. And they also have programs for trained employees and upskilling employees. And then our Manufacturing Extension Partnership, the Arizona MEP, can help support manufacturers, small to medium-sized manufacturers throughout the state with all of their needs. And they're a great program. Additionally, as people are looking to start their own small business or expand a product line, we have our small business checklist. And this is an online interactive tool to help entrepreneurs identify the licensing, registration, and compliance needs at the local, state, and federal level, along with a number of other great pieces like business planning and procurement and marketing opportunities. It is a great resource for all small businesses. And then the final website I want to mention is the state's COVID-19 information and resource page, arizonatogether.org. Now you can find a lot of great information and updates there. So with that, I want to look at some updates. We've got some great updates this week. First, just found out this morning, and I don't even have, the SBA didn't even have their press release up on their website yet, but it was announced that they are making some changes to the EIDL Advance program, and they're going to open it up. So if it's something that you might be interested in, the Advance program is basically a grant. So Hopefully all of you attending are interested in that and might be eligible for it. But you want to pay attention to the SBA's website, the EIDL website, for information on that as soon as they get it posted with the changes that will be in place on how you might qualify for some of that funding. Additionally, for those that applied for the Restaurant Revitalization Fund, that program closed this past Monday. And so hopefully you got your applications in. The last note is a reminder that the PPP program closes on May 31st. So if you are still working and trying to get an application in, really work with your lender. You just have a few more days left to do that. And you need to make sure that it is submitted to the SBA by your lender by the 31st. And then the last note is that the Local First We Rise Accelerator window is still open, application window is still open if you're interested in that program. So with that, we'll look at our upcoming sessions over the next couple weeks. Starting next week, we have setting the stage for resilient performance post-pandemic, financial forecasting, managing teams to return stronger post-pandemic, and then banking and financial ratios for small business loans. So we've got, again, today we have our small business development team from Central Arizona College, Northland Pioneer College, and Coconino Community College. And they will be with us again next Thursday. And then the Thursday after that, as you see on this list of sessions, you'll also notice on Tuesday, the 1st and Tuesday, the 8th, we have our team from the University of Arizona, and they will be sharing some great presentations on those days. So we have a lot of great community partners for the next couple of weeks sharing very timely and important information. So I hope you can join us for those upcoming sessions. So with that, we will go ahead and turn the time over to our team today from the SBDC. We have Gina Couliard from the Coconino Community College SBDC, Katie Bodie from the Central Arizona College SBDC, and Rich Chanik from the Northland Pioneer College SBDC. And I'm sure when Rich talks, he's going to invite you to come up to the White Mountains this weekend and get out of the heat down here in the valley. And so, Rich, I'm going to steal your thunder on that. He's going to invite you again, I'm sure. But folks, I'll turn it over to you guys.
Thank you so much. All right, good morning, everyone. Let me just share my screen here. All right, and can everyone see the PowerPoint? All right,
so
perfect.
Katie, we're seeing your presenter slide mode. So we see the next slide off on the side.
Oh, shoot. Okay. Let me try. Did that work?
There we go. That
solved it? Okay, perfect. Awesome. Okay. Good morning, everyone. As Robert mentioned, my name is Katie Bodie, and I am the Center Director for the Central Arizona College SBDC. And I am here with my colleagues, Gina and Rich, today to present to you the second of 4 webinars that we are presenting to you all about understanding your business financials. And if you all have any questions as we go through today, please feel free to post them either in the chat or in the Q&A box. And we have set aside some time at the end to answer all of your questions. So as I mentioned, today is part 2. And just a quick review of last week, if you were not able to attend. Rich did a wonderful job taking us through all the bookkeeping basics, and we learned what a business owner needs to think about in terms of financials for their business. Then today we're going to build off of that a little bit further, and we're going to talk about each of the different important financial statements and what is included in each and what they mean for you and your business. I'm going to take you through the information in this PowerPoint presentation, and then after I'm finished, the wonderful Gina is going to take you through an exercise that helps you put all the information together and understand it for your business. So before we kind of dig in, I wanted to reiterate something that Rich mentioned last week, and that is that you don't have to be a financial professional to understand your business financial statements. If you were with us last week, you'll remember that Rich mentioned that both he and I did not start out as financial people. We both owned our own businesses and sort of had to learn as we go. Gina is the financial mastermind behind our trio. So anything that we don't know, she definitely knows. But the purpose in my saying that to you all today is that we are coming from the same place that you are. And it is very important to us to explain these concepts in a way that the average person can understand, someone who's not a financial expert. So that is our goal for the whole series, and hopefully we will be able to achieve that today. So moving forward, there we go. I just wanted to take a couple of minutes here at the beginning of the session to talk to you all about the organization that the three of us work for. If you are not familiar with the Small Business Development Centers, we are a statewide network that is also part of a nationwide network of centers that deliver services to small business owners. We work with anyone from someone who is planning to start a business to someone who's in the growth phase, even to someone who is looking to sell their business. The three of us represent 3 different areas in Arizona, and then we also have several other centers in the state as well. So no matter where you are, we've got you covered. We've got our website listed here on this slide, and I will also post it up at the end as well, so that after this session, if you're not currently an SBDC client and you are interested in meeting with any of us, that will be the place to go. To give you a little bit more detail on who we are and what we do, at the SBDC, we spend most of our time working with small business owners one-on-one, providing them with confidential business counseling. As we are doing today, we also provide no or low cost seminars and training. And we also spend a great majority of our time helping clients get access to capital. We will walk your hand through the business planning process, through developing your financial projections, whatever you need when it comes to capital, we've got you covered. We have relationships with almost all of the lenders in the state, and we're happy to provide introductions and help facilitate that. In addition to the things that we do ourselves at the SBDC, we also have some wonderful, wonderful partners that we work with. As Robert mentioned earlier, the ACA has a new business checklist that we present to our clients all the time, which helps you with licensing and registering and permits and all of that good stuff. And then we also have a organization called the Procurement and Technical Assistance Center that helps us and all of our clients with government contracting. So whether it's our organization or one of our partners, if you're a small business in Arizona, please don't hesitate to reach out, because we are here and happy to help you with anything and everything that you need. Okay, so now that I've done our little spiel, let's talk about what we're going to cover today. So today we are going to talk all about the different things that go into each financial statement and what that financial statement looks like. We'll cover all of the information that's needed to compile your financial statements and talk about how that information can be used to manage your business. We'll talk about assets, liabilities, income, and expenses. We'll talk about the chart of accounts, what that means and why it's important. We'll talk about the income statement and the balance sheet, which are the 2 most important financial statements for your business. And then we'll also talk about 2 other financial statements that help to round out your financial knowledge. And I just want to mention that, now is as important a time as any to really dig into your financials and understand them. As we are hopefully pulling ourselves out of this pandemic, it's so very important to understand this information so that you can answer important questions for your business. We want you to be able to understand these financial statements so that you can look at how do you cut costs as you move forward and start to open your business back up again. Now that PPP is ending, can you afford to keep your employees on staff? What does that look like? These are all questions that a lot of our businesses are having lately, and we want to present this information to you so that you can help to understand it and answer those questions for yourself. Okay, so let's dig in. The first concept that we are going to talk about are assets. And assets are what you own in the business. There are several different types of assets. You might have tangible assets, which are things like buildings, land, money, cash. You might have intangible assets, which would be something like the reputation of your business, the value of the brand. You might have living assets, which could be things like plants or animals. And then there are moving assets, which are things like automobiles, drones, airplanes, things like that. In addition to assets as a category itself, there are two types of assets. You might have current assets, which are things that you would expect to use up within a year. There are also long-term assets. Those are things that you plan to use over several years, for example, a building or a piece of land. Now let's talk about liabilities. So if assets are what you own, liabilities are what you owe. So these are things like credit card bills, business loans, taxes, anything that the business is paying on. And just as with assets, you also have current liabilities and long-term liabilities. So current liabilities are things that you would plan to pay off within a year. So hopefully that would be like your credit card bill. Long-term liabilities are things that you plan to pay off over several years' time. So for example, like a small business loan. Now let's talk a little bit about income. Income, which is also known as revenue, is what you earn. It's how you make money in your business. And you might earn income through selling products, you might earn income through selling services, or it might be a combination of both. Next, we have expenses, and expenses are what you spend in the business. So those are things like rent, insurance, utilities, all of those costs that the business has. And as with the assets and the liabilities, there are a couple different types of expenses that your business might have. One of them would be cost of goods sold. Cost of goods sold are expenses that increase or decrease depending on the amount of units that you sell in your business. Then you also have operating expenses. And operating expenses are those monthly ongoing business expenses that you incur that don't typically change with the amount of products that you sell. So that would be like your rent, for example. Okay, so now that we've talked a little bit about assets, liabilities, income, and expenses, let's talk about where all those go and what all that means. So the chart of accounts is your index of the financial accounts of the business. It provides a place for everything to be recorded and tracked and compiled into financial statements. This shows you which type of account it goes in and which financial statement it is a part of. Now, this list that we have here is not an all-encompassing list of all the categories that you might have for your business, but it's a lot of the most popular ones. So you might have some on here that are appropriate for your business, and you might have some that are not, and that is perfectly okay. Another thing to mention is that a lot of small businesses have accounting software that automatically puts all of their expenses and everything into financial statements for them. And this is great if you have that. We encourage all small businesses to use accounting software. But what we really want is to make sure that you, as the business owner, understand what each of these things mean and where it goes. Because that way you're able to have a more informed conversation with your accountant or your CPA or the rest of your staff, and you have a more well-rounded knowledge of the financials in your business. Okay, so now that we've talked a little bit about what goes into the financial statements, let's talk about what each of the different financial statements are. So these here are the four main financial statements for a business. We've got the income statement and the balance sheet, which, as I mentioned before, are the most used financial statements of all small businesses. We also have the statement of owner's equity, which is also called the statement of retained earnings. And then we have the statement of cash flow. And these two are used to provide supporting information to the small business owner, in addition to the income statement and the balance sheet that they will use more often. Now, one thing that we didn't talk about quite yet is what is equity. And equity is what the owner puts into the business. And we'll talk about this a little bit more on a later slide, but just in case you're not familiar with that term, that is what equity means. And in addition to the small business owner looking at each of these financial statements on an ongoing basis, you might have other interested parties that want to see these. For example, lenders that you're working with, suppliers that you're working with, even possibly potential clients or customers. So it's really important for the small business owner to understand these financial statements so that you can have those conversations with outside parties that might need to know that information as well. Here are a couple examples of the two main types of financial statements. We've got the income statement on the left, and we've got the balance sheet on the right. These two statements together record every aspect of business activity. They show past, current, and projected performance, and they help you make financial decisions and plan for the future of your business. Now, there are a couple of different ways that you can evaluate these financial statements. The first way would be horizontally. And if you're looking at one of these statements horizontally, you're looking at the information year over year. So you can look at what happened last year, what's happened this year, and that can help you to project for what might happen in the following year. You can look at, did your sales increase 5% year over year? If they did, then you could reasonably expect they would the following year. You could also take a look at one of your expenses and maybe it increased dramatically in the second year and you think, oh goodness, we need to reduce that for the upcoming year. So those are some ways that you can look at the statements in a horizontal manner. You can also evaluate the statements in a vertical manner. And when you do this, you're looking at what one category does and how that affects the rest of the statement. So for example, if sales decrease and expenses increase, then of course that's going to affect your profit in a negative way. So you're looking at, how does one item in my statement affect the rest of the statement as a whole when you are evaluating it vertically. So now let's talk a little bit about each of the financial statements in detail. So the first one that we'll talk about is the income statement. This is also known as the profit and loss statement. And this is basically a scoreboard of what has happened in your business over a period of time. It might be monthly, it might be quarterly, annually, or even daily. You can look at the income statement. The equation for calculating this information is revenue minus expenses equals net profit. And we've already talked a little bit about each of the definitions here, but I think it's important to just review them a bit. So as we mentioned, income is what was brought into the business during the period of time that you're looking at. Expenses are what went out of the business during that period of time. And then your net profit or net loss is what's left over. And that is what the income statement is made up of. Next, we have the balance sheet. And the balance sheet is like a snapshot of your business at any given time. The top part of it shows what you own, and the bottom part of it shows what you owe. And for that reason, it should balance. And I say it like that because we have worked with lots and lots of clients over the years whose balance sheets did not balance. And so that's why it's so important that it balances, because for everything that you own, you've obviously got to pay for it. So that is something that we help lots of people with at the SBDC, is balancing their balance sheet. And the equation for the balance sheet is assets equal liabilities plus owner's equity. So if we review those things here, as we mentioned earlier, an asset is something that is owned. So for example, equipment, vehicles, inventory. Liability is something that you owe. So your credit card bills, small business loans, anything like that. And then your owner's equity is the amount that the owner has invested in the business. And a really great benefit of the balance sheet is that it shows you the business's health at any given time. You're able to see what cash resources you have on hand. You're able to see how much debt the business is in. It provides very, very valuable information. Now let's talk just a little bit about the other two financial statements. The statement of owner's equity is the statement that shows the owner's capital at the start of the period, the changes that affected the capital, and then the capital at the end of the period. And the statement of cash flows shows the inflows and outflows of cash in the business from its operating, investing, and financing activities. And we'll talk more about these as we go along in our series. Okay, so now for a few minutes, I'm going to turn the time over to Gina, and she is going to take you through an activity that'll walk you through each of the statements we discussed. And then when she's done, I will come back on and wrap up with a few financial tips that we have for you. So I will go ahead and stop sharing and turn things over to Gina.
Hi, everybody. My name is Gina Couliard, and I'm the director of the Coconino Small Business Development Center up here in Flagstaff, Arizona. So, you know, Katie and Rich said that I'm the financial wizard behind all of this, and that's not true. I started my first business when I was 19 years old, and probably for the first 10 years of my business, I couldn't read financial statements. And I was so frustrated where my money was going and not understanding these things that I worked very hard to teach myself and went back to school and did get my accounting degree. But it wasn't because it came naturally to me. It's because I had no idea what I was doing. So I've learned some tricks and tips along the way. And one of the things that I love doing as an SBDC director is teaching people how to read their financial statements, because I wish I would have had that when I was very young. So Katie talked a little bit earlier about the chart of accounts. And so what you see on this page right now, on this first page, is this chart of accounts. And it may look different depending on the accounting software that you're using. You know, some of you use Peachtree, some of you use QuickBooks, Wave. So your chart of accounts may look different, but let's just talk through this chart of accounts so that you get a basis of where some of these numbers are coming from that we're going to use in the other financial statements that we're compiling. So in here on your chart of accounts, all of your assets are always going to be listed first. And in any of your assets that are listed, your most liquid assets are always going to be on top. So, you know, that's cash. Inventory is going to come second because that's going to be the second quickest thing for you to convert to cash. And then downward moving, so furniture and equipment would obviously be your least quick to convert to a cash asset. Now down here next, we see our liabilities. You can see that those are all grouped together. So this company has $24,000, $129 owed to it in accounts payable. Now this third section is owner's equity, which is a topic that Katie touched on earlier. So they have $61,221 in capital. They contributed $4,500 to the business for this period, and they took $27,600 in draws. Now down here on our chart of accounts, we have revenue and expenses by category. So sales returns and allowances, purchases, and then our expenses by category. Now, for those of you who were watching last week and we did those daily score sheets, you can see that a lot of the information that's compiled in this chart of accounts is really similar to those daily score sheets that we did. So remember, your financial information builds on each other. And it's important that as you're working on this, that you're putting good data in so that you get good data out. So this is, like I said, just a sample of a chart of accounts. Now let's go through on the next spreadsheet and look at it in terms of your income statement. So what I've done here is I've put the chart of accounts next to the income statement, and I've filled in a lot of this information already. So your chart of accounts, if you go into your chart of accounts on QuickBooks or Peachtree or anything and you look at it, it's going to show you a balance as of the day. So for this chart of accounts, we're assuming the ending balance of 2019, so 12/31/2019. So this would be a yearly income statement that's being presented here. So we can see that we took our sales, which is in this column right here, our cell, the 567,004, and it's coming from our sales box on our chart of accounts. So most of this information, not most, all of this information is either being pulled from to your balance sheet or income statement from your chart of accounts. So we see that we're pulling less sales returns and allowances for $12,500. And that is coming also right from our sales return and allowances on our chart of accounts. Now, if we go through down a little bit lower, we can see that we're coming into our our inventory as of January 1st. Now, this is a number that you would have to pull from your previous year's chart of accounts, and I don't have that here. So this is a number we just filled in. But then it would go and you would include your purchases for the year. So again, this comes from your chart of accounts. And then, you know, filling in the rest of these categories. So what this is telling you is that your sales were 567 for the year and your gross profit was 224,562. Now you can see that in the operating expenses, right? Because your profit and loss statement shows how profitable you were for a period of time, your scoreboard. And so for this company right here, these were their expenses by category for this period of time. And so what we are showing is a net income of $56,139. Now in accounting, if this were a negative number, which some of us see, even though we don't want to, right? I know I don't like to lose money, but those will be, numbers, if you do lose money, will be surrounded by, I can't think of the word right now.
Brackets.
Brackets, thank you. So a positive number will not have brackets and a negative number will have brackets. So this company made $56,139 for this period. I would be pretty happy with that. And so this is a very, very simple income statement. Now, I did know that there were some questions in the chat for nonprofits. And your financial statements for a nonprofit are going to look a little bit different than a traditional for-profit business, because you're going to have earnings based on the types of funds you have and those fund balances. If you have questions on reading your financial statements for a nonprofit, I'll put my email up in the chat and you can reach out to me, and I'm happy to teach you about that. But we're not going to be doing a ton of nonprofit stuff, or we're not going to be doing any nonprofit stuff in terms of funds in this series. So let's look through on our next thing. And this is the statement of owner's equity. So again, we're using information from the chart of accounts. This is still the same chart of accounts. I just pulled it over so that you could view it side by side. And we could see that our capital beginning January 1st was 61,221. We can see here that our contributions were $4,500, which we pull from right here. Our net income, and this total, right, is pulled from our income statement, which is what we just went over. So these statements, your statements of owner's equities or your statement of cash flow, use information from your income statement to calculate the totals on these two statements. So our total additions for owner's equity is $60,639 for this period, which is December 30, or the year of 2019. Now we see that we have draws of 27,600. So our balance of owner's equity at December 31st is 94,260. And remember, we pulled our draws from right here. So, you know, it was really confusing for me as I was learning to read these statements. of where to look for this information. So what I would challenge you as a business owner is start over, or start, at the beginning of a period, see where you are, and then pull your profit and loss each month and try and reconcile and put the puzzle together of what's happening. And I know that it's a hard activity, especially if this isn't your natural skill set. It was for me, but the more practice that you get, the stronger that muscle is going to be. So let's move next and look at the balance sheet. And the balance sheet, many business owners just want to see their income statement. Well, how much money am I making? How much money am I making? But I'm a big believer in planning for the long term, right? So we want to make sure that your balance sheet is healthy. Does it reflect really what your business is worth? Because as you start thinking about exit strategies and maybe lending opportunities and these kinds of things, you really want to make sure that your business is healthy and portrayed in the best light to prepare you for any of those opportunities. So if we remember what Katie said, we know that the balance sheet, right, is a statement. It's a point in time. So it's not going to be for a period. So think of your credit card balance, right? You have a zero credit card balance, but you go to Safeway and you spend $200. At that point in time, you have $200 in liabilities. But if you pay it the next day in full, you have a $0 liability. So your balance sheet is a point in time. And most of them are prepared in your financial statements at the end of the year. I would still suggest you look at it in your QuickBooks or any accounting software quarterly, monthly, to just make sure you're aware and all of your transactions are recorded in the right place. So let's just talk through this balance sheet. And like Katie said, which is so true, it has to balance, right? Your assets have to equal your liabilities and owner's equity. If that does not match, then you have an error somewhere in your accounting solution. So let's talk through what this business is worth as of December 31st, 2039. So here we have $45,356 in cash. Again, we're pulling that right from our chart of accounts that we've used, for each of these statements. We have inventory of $47,178, which we're pulling from the chart of accounts. And then we can see that we're pulling down, prepaid expenses, furniture and equipment, accumulated depreciation for total assets of $129,409. So again, I just want to talk through, anything on your assets list in your financial statements is going to be from most liquid asset to the longest term to turn the asset into cash. Now let's go through and look at this, right? We see that we have $24,129 in accounts payable. Again, that's coming right off our chart of accounts as of December 31st. Loans payable of $11,200. So our total liabilities is that's a lot of money, $35,149. And then if we remember, our owner's equity is $94,260. That's our share in the company, right? That was a real hard concept for me to grasp. So between our owner's equity and our liabilities, it's $129,409. So these do balance, and this company has about $129,000 in assets. Now let's go through and look at the statement of cash flows. And what this is going to do is just show us how much cash the business generated during this period of time. So our net income, again, this was taken from our income statement. We can see that we had adjustments in depreciation, which is $2,400, and that should be on here somewhere. And then decrease in inventory of $48.22, a decrease in prepaid expenses. So after we reduce these things from our net income, we see that we have net cash from operating activities in the total of $46,467. Now here we have our owner's contributions, which were $4,500 from the year and taken right from here. We have our owner's draw of $27,600, which is taken right from here. So we have a net increase in cash for the year for this period of $23,000 $367. So our total cash on January 1st was $21,989. Again, this was given to us for this example because we don't have the 2018 balance sheet with us in this example. So our cash and cash equivalents as of December 31st of this year has increased $23,000 to $45,356. So that means that our company's healthy, right? Our cash is increasing. So let's go through and look at this last slide, a little bit of analysis. And, you know, Katie talked a little bit earlier about doing a horizontal analysis where we can do percentages, or a vertical analysis where we're looking at things in terms of a percentage of sales. And we're going to dive into that a little bit more, not a little bit, a lot more next week when we start looking at that and start talking about and projecting our cash flow. Super important for a business. But let's just look at these and start giving words to what we're seeing, right? So for this business, our sales were $567 in 2019. Those sales increased to $624 in 2020 and $736, $540. So, you know, if I were a business owner, I'd be pretty happy with those kinds of increases. But also the first thing that I would think about is, well, let's look at our bottom line, right? How much has our profit increased? And if we look down here at our net income, in 2019, our net income was $56,139. But even though our revenue increased in 2020, our net income decreased pretty substantially, over $30,000. But then our net income increased in 2021. So as a business owner, this would be an area of concern for me. What's happening in my income statement? What's happening in my financials that caused this kind of drop for my business? Now, if we go through and look at this and start talking about the analysis, right, we can see that not only did our sales increase in 2020, but also did our sales returns and allowances. I mean, a very substantial jump from 2019, almost $10,000. So what's happening there? These give you clues as a business owner of things that you should start checking into or visiting. Are these areas of improvement for your business? Now we can see here that our inventory decreased in 2020. Are we having products with payments? Are we having products with suppliers? What's happening with this inventory decrease? And then we can go down and look at some of these other expenses. Our advertising increased, but you know, we would expect that with a sales increase. And then we look here and our payrolls increased by over $30,000. So did that sales increase really justify that much of a payroll increase? So as a business owner, this would be something that I would look at as well, you know, to really start seeing and adjusting if I need to make changes in my operations and my business and if it's running effectively. Because, you know, with this example, you've made more money, but brought in more revenue and created more work, but actually made less money. So just some things to think about as you start, you know, looking forward and preparing for next week. We are going to look at doing a horizontal analysis and a vertical analysis next week, and then how we use that information to start projecting our cash flows. Now let's go through and look at our balance sheet in light of this, situation we just did. So our cash has increased from 2019 to 2020 by about $17,000. Again, an inventory decrease. So our total assets, even though we, you know, made a whole bunch more sales, our total assets only increased by $5,000. So is the work and the effort and the expenses that we're putting in really justifying this small level of return? Our accounts payable have been reduced, our loans payable have been reduced, and our owner's equity increased, but again, not at the same amount as it did from 2018 to 2019. And remember, we saw a $23,000 increase in our owner's equity in that year, and only a $5,000 increase this year. So these would be things that I would look at and start analyzing, and would be places of concern for me in starting my business. So I hope this helped. Again, for those of you who have nonprofit questions, I will put my email up in the chat, and in the chat, yeah, and so that you can get a hold of me, and I'm happy to teach you how those statements would look a little bit different if you were a nonprofit, because there are many similarities, but there are also variances based on restricted and unrestricted funds for nonprofits. So with that, I'll turn it back to you, Katie. Thanks, guys.
Thank you, Gina. Okay, let's bring my screen back up here. All right, can everybody see that? I'll take that as a yes. All right. Okay, so now that we've talked a little bit about what goes into each of the financial statements and what the financial statements look like, we wanted to leave you with a few tips today. So our first tip is, please make sure that you're keeping your business and personal finances separate. This is so very important when it comes to tax time, because if you don't, you'll be sorting through and figuring out what was personal and what was business, and it's just a mess. So as soon as possible in your business's life, please separate your business and personal finances. The next thing that we want to remind you to do is check your bank account regularly. Honestly, every day. This helps you to really see how much money do you have in the business, what does your bank account look like, and it can also help to protect you against fraud. So that is another very important tip. The third is make sure that your chart of accounts is set up correctly and clean. Now, this is something you can do yourself, or this is something that you could have an accountant or a CPA set up for you and review with you. Or if you set it up yourself, you can always ask an accountant or a CPA to review it to make sure that it is correct. So there is help out there. If you don't have an accountant or a CPA, that is a type of referral that the SBDC gives out all the time. So please reach out to us, and we're more than happy to provide you with a few different options. And then the last is, of course, be active in reviewing your financial statements on a regular basis. We're talking monthly, quarterly, and annually. And this sort of brings me back around to where we started, in that this is something that the SBDC helps with all the time. We help people make sure their financial statements are correct. We help them review and understand their financial statements, and we help them to use their financial statements to both budget and project out into the future. So if this is an area that you're going, oh my gosh, I could really use some help with it, please reach out to us, because we are more than happy to sit down with you and walk through everything. No matter what part of the state you are in, we've got an office that can cover you. You'll see our contact information here, but also our website listed on the left-hand side, which is the best way to find out information about the SBDC and connect with whatever center is closest to you. So with that, I will go ahead and stop sharing my screen, if I can figure it out here. And then we will open everything up to questions. Maybe. All right, I'm having trouble figuring out how to stop sharing my screen. Let's see, that did not work.
Up on the top of the screen, on the one that's being shared, there'll be a thing, you have to scroll up towards the top of the screen and it'll say stop share.
Oh, it moved over. I'm sorry. I have got 3 screens and I can never find my mouse or anything. So sorry about that, guys. Okay.
So there's a question that I saw in the Q&A that got answered, I think, by typing the answer, but I want to bring this up because I think more people may have this. It was from Anna. It says, why do we separate costs of goods sold from operating expense in the COA, the chart of accounts? I noticed that when you subtract operating costs, we have net profit loss, while with cost of goods sold, we have gross income.
Do you want to take that one, Gina?
Sorry, I was typing other answers in the chat and wasn't listening, to be honest, but was it on the cost of goods sold question?
Yeah, on why
Okay.
they're separating the cost of goods sold from the operating expenses.
Yeah, sorry about that. I was answering the other ones. So cost of goods sold is a direct expense related to sales. And so when you start talking about profit, there's two different types of profit, right? There's an above the line profit, which is just your revenue minus your cost of goods sold, which is the direct expense for you creating the sales. And then your below the line or net profit is your revenue minus your cost of goods sold and all your other expenses. So like advertising, fuel, payroll, those kinds of things. Now, some more complicated businesses who have direct wages that are tied to their cost of goods sold could see some of that labor in that above the line too. This was just a very simple example. Does that answer it?
Hopefully that does. Another question I saw that might pertain to more people as well is inventory valued wholesale or retail?
So the inventory would be valued wholesale because it's going to be whatever you paid for it in your books. Now, remember, the difference is your wholesale inventory is what you write a check for, right? Now, the revenue is going to account for your portion or the profit, or not the profit, the revenue that you took on that product.
There's a good question in the Q&A. It says, can we pay for bookkeeping, for example, QuickBooks with an EIDL advance?
So the idle advance and the idle loan are two different things. The idle advance is a grant. And so if you're talking about idle funds, your idle loan, any of those funds can be used to pay for operating expenses. So the answer to that would be, in short, yes.
Excellent. And the next one from Anonymous, when owners draw from the business, how does the balance with the cash they put in mean eventually you hopefully draw much more than you put in? How does the balance on the balance sheet?
So what's going to happen a lot of times on your owner equity account, right? Many businesses have an owner equity account and an owner's draw account. And so when you start your business, say you start your business and you invest $100,000 to start. So you would have owner's equity of $100,000 at the beginning of the year. Now, say the first year your business made $15,000 in net profit. So at the beginning of the year, when you started January 1 and you put in your $100,000 to start, your balance sheet would show that your owner's equity was $100,000. Now you made $15,000 in net profit for the year. So at the end of the year, your balance sheet would show that you had owner's equity of $115,000. And so now say the next year you decided you wanted to take a draw of $65,000 and made no profit, your owner's equity in year 2 would have a balance of $50,000. So what that account does is just track how much money you've invested or earned over the life of the business.
I noticed in the question and answers a number of people asking about the previous session. So I'm going to share my screen real quick and show people on the website where to find it. So if you go to this website, and I believe we posted that in the chat, this is the Small Business Bootcamp website. This is where you register for the upcoming sessions. Here's the next few weeks listed as well. If you want to register, you can. You have a resource collective and then the archive. So the first session that this team did last week is under week 54. You hit the plus button, it will open up and you can find their bookkeeping basics. You click on it, you double click on it, and it will open up the page to watch the video and download their slide deck. So quick sample of how to find that information on the Bootcamp website. All right, next set of questions. Amy has an interesting question. It says, for service businesses where there are physical deliverables, for example, printed reports mailed to a regulatory agency, are the expenses related to those printed reports operating expenses or cost of goods sold?
You know, Amy, I've been trying to type a response to that. And you know, I would say it depends. And you may just be getting into splitting hairs here, right? That's a question without knowing the ins and outs of your business. I would ask my CPA about that. Generally, printed reports are just operating expenses. And so I would defer to that one to your CPA. And then if you're a home-based business, can you pay partial rent payments for office with an EIDL loan? Again, Deborah, that's a question that I would ask your CPA for. EIDL loans proceeds can be used for operating expenses, but there's really stringent requirements for a home-based business. And the SBDC is not allowed to give you tax advice. So I would refer you back to your CPA on that one. Can you do a future presentation on determining work in progress? Dickerson, this is probably something that maybe the ACA could do, a work in progress. Can you see that one, Bob?
Yeah, I can see that. We can look at that and see if it would make a whole session, and maybe we may be able to do that. We'll take a look at it and see it.
So Vicki Solomon, for nonprofits, which of the 5 reports would the board of directors want or need to look at quarterly? So Vicki, for nonprofits, I would say that the statements that they would want to look at are the income statement and then the balance sheet, because the balance sheet is going to show you the earnings and returns on each of the funds. Again, those are going to look a little bit different than they do for a for-profit business, but I would say those two. Will you be having a webinar on how to build insurance company for non-medical home care business?
Probably not. It's a little too specific for the target audience base. But that's something that you might be able to work with the SBDC in your area, because they may know of other home-based, non-medical care businesses and see how they're doing that, or have some experience building insurance companies. So initially, I would reach out to your local SBDC and see what they can help provide. With that, it looks like we're right about at time. So, and that's all the questions we have in there. Katie, Gina, and Rich, thank you for joining us today. Thank you for this great presentation. Everybody, Faith posted in the chat the link to the Small Business Bootcamp website, so you can go back and look at the archive of the previous session or rewatch this session. The recording will be posted later today on that same website. So we appreciate everybody being here. We appreciate our SBDC team for their expertise and their knowledge. We hope to see everybody next week on our bootcamp sessions. Just a reminder, Monday is Memorial Day, so hopefully you have a great Memorial Day weekend. Everybody be safe, enjoy the weekend, and we will see you on Tuesday. Thank you.
Thank you, everybody.